In the ever-evolving world of digital assets, BLUAL Coin has recently begun drawing attention from investors and analysts trying to determine whether it represents the next big breakthrough in blockchain technology or simply another speculative token riding the waves of market hype. To understand BLUAL Coin's true potential, it's essential to step back from the excitement and analyze it from multiple dimensions: technology, tokenomics, ecosystem, market performance, and the behavioral patterns driving its price action. This professional breakdown aims to provide a complete 360-degree view of BLUAL Coin, what it stands for, how it operates, and whether it has the characteristics to survive in the intensely competitive world of decentralized finance, DeFi, and digital assets. 1. The genesis of BLUAL Coin. What is it trying to solve? At its core, BLUAL Coin was introduced as part of a broader ecosystem designed to merge blockchain transparency with AI-powered automation for real-world problem solving. The project's mission is to build a decentralized layer where users can leverage AI tools within Web3 environments, from automated trading bots to decentralized data analytics. BLUAL aims to simplify how users interact with AI and blockchain by removing the need for technical expertise, offering an easy interface for deploying smart contracts and automated trading strategies. The founders of BLUAL presented their vision as a bridge between traditional Web2 machine learning and Web3 financial infrastructure. This hybrid positioning immediately set it apart from purely speculative meme coins, giving it an air of legitimacy and technological ambition. However, ambition alone doesn't guarantee sustainability, as many promising blockchain projects have failed due to poor execution, token mismanagement, or unrealistic roadmaps. Understanding whether BLUAL can overcome those pitfalls is key to judging its long-term potential. 2. The technology. How BLUAL works behind the scenes. BLUAL's technology framework is reportedly built on a scalable smart contract infrastructure that supports both Ethereum and Binance Smart Chain compatibility. This dual-chain flexibility allows users to move liquidity easily between ecosystems, reducing gas costs and improving accessibility. Its smart contracts enable decentralized AI model hosting, meaning AI tools can operate on-chain in a permissionless environment, protected from centralized control or censorship. One of the project's notable innovations is its BLUAL engine, a decentralized computation protocol that allows developers to deploy AI algorithms using tokenized computation credits. This mechanism incentivizes node operators to contribute computational power to the network in exchange for BLUAL tokens, creating a self-sustaining ecosystem of compute, reward, and AI development. The system bears resemblance to AI-focused blockchain networks such as Singularity and Render Token, which have shown that decentralized AI marketplaces can, in theory, revolutionize data sharing and computation distribution. However, the effectiveness of such technology heavily depends on community participation and the efficiency of the token model. Without consistent demand for AI computation or real-world utility, even technically advanced tokens can lose traction over time. 3. Tokenomics. Understanding BLUAL's financial engine. Tokenomics often determines the real fate of a cryptocurrency even more than the tech itself. According to the available data, BLUAL's supply is capped, with an initial circulation distributed through liquidity pools and ecosystem incentives. A portion of the total supply is reserved for developers, early backers, and future AI infrastructure funding. The deflationary model involving periodic token burns and staking rewards is designed to support scarcity and encourage long-term holding. However, the key question remains: is the token truly utility-based or speculative? A sustainable coin should have genuine use cases that create organic demand beyond price speculation. BLUAL's token can reportedly be used to pay for AI computation, data analysis tasks, and decentralized automation tools. Yet, in the early stages, demand for such services tends to be limited compared to trading activity, meaning that a large portion of BLUAL's price movement could still be driven by speculation rather than functional usage. For now, its staking rewards and liquidity farming programs attract investors who want short-term yield. While this can help early adoption, it also carries the risk of a pump and dump cycle if the underlying use cases don't mature quickly enough. 4. Market sentiment. Is BLUAL pumping or dumping? Market sentiment plays a critical role in any coin's short-term trajectory. BLUAL Coin has shown signs of volatility typical of newly listed tokens. During its launch phase, trading volume surged as retail investors sought to capitalize on hype and early price momentum. Social media buzz around AI coins and the broader narrative connecting artificial intelligence to blockchain helped BLUAL gain traction among traders seeking the next explosive project. However, this kind of rapid attention can be a double-edged sword. On one hand, it creates liquidity and market awareness. On the other, it attracts pump and dump groups and short-term speculators who exit quickly once profits are realized. Historical data from similar tokens suggest that such speculative cycles often lead to steep corrections once the hype cools. To assess BLUAL's real stability, one must look at the ratio of organic holders versus exchange traders. A healthy token should show increasing numbers of long-term holders addresses accumulating and staking rather than flipping for quick profit. If BLUAL's on-chain metrics indicate that most wallets hold tokens for only a few days or weeks, that's a warning sign of speculative dominance. 5. BLUAL's market position and competition in the broader crypto landscape. BLUAL faces stiff competition from established AI and data-focused blockchain projects like Fetch, Ocean Protocol, and Singularity. Each of these platforms has been building AI infrastructure for years with proven technology and growing developer communities. For BLUAL to differentiate itself, it must offer either a unique use case or superior user experience, not merely similar functions under a new brand. If BLUAL can effectively merge decentralized computation with intuitive AI tools for non-developers, it may carve out a niche among retail creators and small businesses that lack access to enterprise-grade AI platforms. This could lead to sustained token demand as more participants use BLUAL to power automation, trading, and data insights in Web3. Still, achieving that scale will require partnerships, integrations, and community growth, all of which depend on transparent communication and roadmap delivery. Investors should carefully monitor whether the team delivers real updates or merely cycles through hype narratives. 6. Risk factors. Red flags to watch. Like any emerging crypto asset, BLUAL carries multiple risk layers. The most common include smart contract risk. Vulnerabilities in its AI execution engine or staking contracts could lead to exploitation or fund loss. Liquidity risk. If too much supply is held by a few wallets or exchanges, market manipulation becomes easier. Regulatory uncertainty. As global regulations on AI tokens tighten, projects like BLUAL may need to comply with evolving laws, which could impact token use or trading accessibility. Adoption risk. Without real users utilizing AI services, the ecosystem's value proposition could weaken, leading to stagnation in both price and utility. The crypto market's history shows that many well-branded projects with ambitious goals failed because they couldn't balance hype with delivery. BLUAL's long-term success will hinge on execution and user retention, not marketing. 7. The path forward. Can BLUAL build sustainable growth? For BLUAL to transform from a speculative asset into a sustainable project, several steps are crucial. First, the development team must release transparent, verifiable updates proving that AI integration and decentralized computation functions are operational. Second, the project must prioritize developer engagement, offering grants, hackathons, and API documentation to attract builders. Third, it should form partnerships with existing AI and Web3 platforms to expand its ecosystem reach. Community governance is another critical component. If BLUAL introduces a decentralized voting system where holders can propose and approve ecosystem changes, it could strengthen user trust and participation. Transparency, accessibility, and accountability are what separate long-term blockchain projects from short-lived hypes. 8. Investment perspective. Long-term or short-term play? From an investment standpoint, BLUAL represents a high-risk, high-reward opportunity typical of early-stage blockchain projects. The token's exposure to both the AI narrative and decentralized finance gives it speculative appeal. Still, investors must approach it with caution, balancing enthusiasm with research. Short-term traders might find opportunities in BLUAL's volatility, while long-term investors should focus on technological progress, partnerships, and ecosystem metrics rather than price movements alone. If the team delivers real utility such as AI marketplaces or computational nodes generating consistent token usage, BLUAL could evolve into a meaningful part of the decentralized AI movement. But if utility remains vague and community momentum slows, the token could experience the same fate as many hype-driven coins before it, short bursts of glory followed by gradual decline. 9. Conclusion. The reality of BLUAL coin. In conclusion, BLUAL coin sits at the intersection of two of the most powerful technological trends of our era: blockchain decentralization and artificial intelligence automation. Its vision is bold: to create a permissionless AI layer that empowers individuals and businesses to deploy smart automation directly on the blockchain. The idea itself holds transformative potential, yet its success depends entirely on execution, transparency, and genuine user adoption.